And so that's what our forefathers were actually trying to tell us, is that everyone should have an equal voice, even when there are places that we don't think about them. And so I'm really hopeful that as I learn more and as I continue to document this, I'll be able to write something about this, because I do think it's the greatest work of my life.
Hey everyone, welcome to another episode of Get Carried Away. I am your host, Carrie Murray, founder of the Bra Network, and joining me today is B. Oh, I'm so excited to be talking to you. B. Pagels-Minor is an award-winning product strategist, podcast host, startup advisor and investor, executive coach, and a respected thought leader in agile technologies who approaches every problem with strategy, curiosity, and genuine authenticity. Woo, that's a lot of great words. As a dedicated enthusiast of scalable processes, great products, and culture development, B's fierce strive to promote diversity in tech and impact authentic change continues to define their work, life, in and outside of the work stratosphere. Welcome, B. I'm so excited to be talking today. I think I met you through Catherine Gray originally.
Yes. I mean, doesn't everyone meet each other through Catherine Gray here?
I think so. I think she does know everybody.
She's the Kevin Bacon of Southern California.
This is so true. B was also on a panel at the Wealthy Women Summit that I did last August with Catherine Gray's panel, all about investing and funding and, creating a fund or getting funding. And you can catch the replay of that. I'll put that in the show notes, the link to your great panel. It was really great. It was on the boat. Did you feel any queasiness when you were on the boat at all?
Oh my gosh, it was so bad. I literally
So
I've been on smaller boats, I've been on larger boats, but all of them have been moving. So there's something, my wife said that there's something about being stationary on a boat, but being able to see that it's moving that makes you more queasy. So the entire time I was on the panel, my eyes were basically closed because I couldn't do it. It was really bad.
And you guys were in those high top chairs too?
Yes. Honestly, I was like, please don't slip off the chair. They are literally recording this and taking photos. Although the crowd was so nice and I'm sure that everyone would have just been so chill, but I would have literally had to sink into the ocean of embarrassment if that happened. So
it's all good. We had a few people. I know at some point when I could see behind you, the horizon move, I was like, oh no, oh, no.
Yes.
We might need to go. That's why this year it's not going to be on a boat. But anyways, thank you again for coming and doing the panel back then in August and managing seasickness, even though we didn't go anywhere. But since then, you have now founded Divergent Ventures. First, before you tell us all about Divergent Ventures and why you started this, I'm dying to know, when you were a kid, if I were to have asked you what you wanted to be when you grow up, would you have said, oh, I want to create a venture firm?
No. So I would have said I wanted to be Claire Huxtable.
Oh, yeah.
Yes. And funny story, I actually did go to law school. And in my law school application, I said I wanted to be Claire Huxtable. So I legitimately
Did you go to Howard?
I did not. So I did not go to Howard, actually. So I actually went to the John Marshall Law School in Chicago.
Okay.
But so I was I was 25. So this went on through the age of 25. So this is a very specific thing. But I'm actually also a proud law school dropout because I discovered tech. So, it's one of those interesting things that happened in my life.
I love that. That's so exciting. Do you ever plan on going back to law school, or you're just like, bye?
So if it were up to my parents, yes, I would go, because technically I only have 2 semesters left. So that's actually not a tremendous amount. But I try to explain to them that I would still have to pass the bar. Yeah. Right. And so passing the bar is a big deal. That's a huge thing. And now I have a kid. We're planning on having more kids. I'm not sure if I have the energy for it. However, I am thinking about getting an MBA, right? So this is the executive MBA, because that aligns a little bit more with, my long-term strategy. But most importantly, one of the things I learned from, business over time is that the best way to be a great business person is to be surrounded by other people who want to be great business people. And so that's one of the things, steeping myself up in a crowd of those people seems like it makes more sense than trying to be with a bunch of attorneys, when I realize the thing I least like about the law is the fact that you have to wait for it to come to you. Right. Yeah. You can't just simply say, I dislike this thing, let me go fix it. You have to actually go find a scenario to then go over and try to fix that thing. And I'm not like that. I'm more like, let's make a lot of money, pay whatever you got to pay to fix whatever this wrong is and make it right. So I'm a little bit different in that way.
Oh, I like that. Well, you'll probably get to a solution faster. And if you can, put money towards the problem as opposed to waiting and waiting and waiting. Yeah. I can actually see you in a courtroom though. Be kind of cool.
Oh yeah. Oh, I can debate with the best of them.
Yeah.
It drives my wife crazy.
I love it. I love it. Well, tell us then, from law school all the way to Divergent Ventures, what was your pathway to get you to start Divergent?
Yeah, so I'm one of those fortunate people that my path was not, defined for me. I didn't have parents who could open doors or who had big bank accounts who could support me in that way. I was very loved. Actually, I always tell people I went to school, I went to some of the fancy schools in the world, and the difference between me and the other people who graduated is that at least I knew my parents loved me at the end of it, because I was like, some of their stories were terrifying. I was like, oh my goodness gracious. It's like, your mama don't cook for you when you go home. Like, this is sad. I don't know what's going on with your life. But
that is
I graduated. It really was sad. I was like, she don't even take you to dinner. I was like, darn. I was like, you got to pay for yourself. That's sad.
That is sad.
So I graduated in 2008, though. And so I graduated the largest economic downturn. And so I actually started off my career as a store manager at Target. And honestly, though, being a store manager at Target is some of the best experience you can ever get. Because first of all the employers are smarter than you, because all of them have been there way longer than you. And so they know way more than you do. So like that humbled me very quickly. And then the first time you have to like argue with an old grandma about whether the cereal was stale before she opened and ate half of it or not, and your manager told you that like the district leader says that they'll have too much loss for your store, so you literally have to argue about $4 with someone, it will completely change your mind about your career trajectory. It's like, no, I need to figure out what I'm supposed to do, because this is super frustrating, actually.
Especially for a $4 box of Raisin Bran.
Exactly. But the great thing about working at Target is that they would pay for grad school. And since I couldn't afford my student loans anyway, I went to grad school. And so I actually did an MBA MIS program back in the day. And that program led me to a company called Sharecell, which was in affiliate marketing. So affiliate marketing is, well, so they call it performance marketing. Every time they change names whenever they think something gets a bad rep, but they call it performance marketing. And essentially, if you are a human that you go to someone's blog and you click a link and then it takes you to a place to buy something, that's performance marketing. And so I started off there as tech support, then kind of, became agency relationship manager, and then kind of became the first like product person. And that changed the trajectory of my career, because I've been a product person for the rest of my career and kind of increasingly larger companies. And even that was by accident. A lot of people, they get very impressed because they're like, oh, you worked at Apple, Netflix. But it was really because I had decided to do a lot of public speaking. Like, I wasn't getting the traction that I wanted in Chicago. And let's just be truthful, Chicago historically is a primarily, cisgender white city, right? Yeah. And it's also a lot of, kind of the historical United States businesses. So manufacturing, insurance, fintech, things like that. And so I didn't look like those people. But I realized, because, even back then, like influencers were always a thing. Like, I hate that they call influencers, they give influencers a bad name, but there's always been people that we follow that we are like, oh, well, like that person's cool. I'm going to buy their book, or I want them
like
to have
Claire Huxtable.
Exactly, like Claire Huxtable.
She influenced us.
And by the way, Mrs. Huxtable Goes to Kindergarten, best episode ever, because she goes on a local like PBS show and she like runs circles around them. And so that's, again, it's that same idea. So I was like, if I can talk in front of people and show them that I'm smart, maybe I'll get better jobs. And so that took me all the way to San Francisco for Lesbians Who Tech in 2018. And then a recruiter from Apple saw me talk and was just like, we need to get you an Apple. And so that was like the next huge change in my career, because getting out to Silicon Valley, all of a sudden people put respect on your name and gave me an opportunity to start getting into these rooms. And so then that's actually how I got to Divergent, right? Because you get into these rooms, you have opportunities to invest in various companies or to learn about companies before they are even, a company that, other folks know about. And so then you have the opportunity to say, sure, I would like to throw my like small amount of money, right? Because, I still don't consider myself rich, because I now hang out with rich people. So I know what rich looks like. So I'm a person who is comfortably able to live my life compared to those folks. Actually, I went to a preschool the other day to potentially enroll my son, and there's like 2 Rolls Royces in front of this preschool.
Wow.
And I was like, wait, so we going to the same preschool? I was like, it's on my budget. It's in your, I was like, it's definitely in your budget. You have a Rolls Royce. But that's the type of world I live in now, which is very strange. But yeah, so I ended up going through and having these investment opportunities, and I paired that with consulting, right? Because what was happening is you, when you hear about these companies before they hit big, you also get these opportunities, you know, not only to invest in them, but to help them get to their point. And so that's when I started to really, you know, hone my product experience and become a product market fit expert. And so those two things combined, it just kind of naturally evolved into, you know, creating Divergent, right? Because I kept meeting these really great, excellent companies. And my background being from Mississippi and then having lived for so long in the Midwest, it just naturally gave me an opportunity to see that there's so many great founders outside of the traditional tech ecosystem that just are completely overlooked. And then if you combine my network, my desire to give back in this way, and a check, it just really created this really great synergy that became Divergent Ventures.
I love that. I love that. Now for the people who are listening, and if any aliens just landed on Earth and happen to listen to this podcast, what exactly is a venture firm? What does
Yeah,
exactly do you do?
so first and foremost, a venture firm is an organization. So one of the ways that I'd like to think about this is that people think of venture as like this huge thing, but it's
Yeah.
essentially just an entity that allows people to invest into companies before they're public, right? And so, for instance, if you are a human who has money, you would go to a venture firm and say, here is a check that I now expect you to invest in a slate of companies. So not one company, it's always like one way that people pitch is it's a diversified portfolio of
Mm-hmm.
companies that match your thesis. So your thesis was whatever statement whatever position that you've taken in terms of how you're going to make your investments. And then they get exposure to that. And the expectation is that, you know, you're going to return value to them. Now, you know, kind of the most minimum standard for a VC firm is like at least a 4x return. But the reality is that, you know, the expectation or hope is that you're going to have a 70 or 100x return on what people have invested with you. So again, it's kind of just a little like it's kind of a wrong statement to think of a firm as like a traditional company. Instead, it's an entity that allows for investment to happen in these companies. And I like to clarify that point because a lot of times people will come to me and approach me like I'm a company and
Mm-hmm.
say, hey, B, you know, can you do XYZ? And I was like, oh, no, that's not what venture firms do. Like, you know, I literally only invest to make those investments and to ensure those investments are successful for people.
That was a perfect definition. That was explained perfectly. I think my, 12-year-old could understand that now. That was great. Because I do think there is a lot of pie in the sky thoughts when we hear the word venture or capital or investing. And we're like, nope, that's not me. I don't have any money to do that. That's not me. Or that's not my brand. We're never going to be ready to get funding. I'm just going to be in my own little influencer lane and sell on direct to consumer on Instagram or anything, but really we should all be looking to get funding if you're a business owner. Speaking of that, why the Midwest South area? I know that's where you're from, and I know that's where you're trying to create the most growth, but what made you hone in on that particular area of the United States?
Yeah, so it started off with so what I'd like to talk about is that as a product person, my number one job is to make insights, right? It's not actually to, you know, people are like, oh, well, you decide what goes into the product. Well, the way I decide what goes into the product is by having an insight. And that's about being deeply enmeshed in the day-to-day of what's happening, working with people and learning about them. Like when I'm working on a product, I'm constantly talking to people who use my product so that I can listen for that thing that they're not saying. I mean, it's the old Henry Ford thing. It's like if you had asked people what they wanted, they would have asked for a faster horse, not a car. Like it's
Right.
the same exact thing. And so this is what happened when I was doing all this consulting, right? Because like what would happen is that I'm like, oh, well, this company is great. I've helped them, you know, really set themselves up. They look like a growth company. I think they're ready for their seed or their Series A or their Series B. And so then I would come back over to my folks on the West Coast or East Coast and say, look at what I've done with this company. They're really great. All of their growth metrics, which by the way, most people don't realize this. So if you ever are founding a company, there's lots of tools out there that can tell you, for instance, all of the metrics that, this company that was at seed stage looked like this company at Series A looked like this. And many of these companies had outperformed all of these numbers, right? So logically, right, again, because I'm a logical person, like I try not to be a heart-focused person, but I'm a logical person. I would say, well, if these companies look like this and it's better than what these other companies look like, in theory, you should want to invest in them. But the pushback I was getting was, well, you know, no, that person's like whatever. Like I don't know if I get it. And I'm like, well, what don't you get? Like this is a product that like literally exists everywhere and people need to use it. Like, and it's like the numbers are working out. I'm so confused. And when you keep asking why, so like there's this theory called the 5 whys. And so you keep asking someone why. And so eventually you'll get to the crux of what the issue actually is. And what it really ultimately was the fact that these people did not know them. They did not go to the same schools that they had gone to. They weren't a part of their network, so they didn't feel confident. So that's one of the secrets about VC that people don't know. And in fact, that's one of the differences between like a lot of people who are modern VC people now and people who are like the holdovers from VC. The main difference is that we're going through and using every tool known to mankind to try to develop this great deal flow that allows us to make the smart investment, right? So it has nothing to do with our network. Like my best friend can come to me and say, B, I have the best idea in the world. I have all these different backers, and I get to say no. Because I'm like, even though I like know all that about you, I actually have this data over here that says that, there's actually companies that look better than you, right? And so that's the way that you have to think about these investments. And so because of the fact that I kept getting this pushback, when very logically these people looked better than these other companies, I had to say, well, this is because of where they're located, right? All things being equal, if these same exact people had gone to the same schools as y'all or were located on the coast, chances are they would get this investment. And so then when I realized that, I said, well, let me look at the data, because like maybe this is just like a one-off for the people that I know. But the data actually shows it too. So essentially 86% of all VC investment goes to 5 states. So it goes to California, Washington, New York, Massachusetts, and Texas. Right. And then it's not even comparable between those, because like the difference between Texas and California is like many orders of magnitude different. Right.
Sure.
And so it's exceptionally disturbing when you think about that, because what you're saying is, this population of the United States is like, I don't know, it's like 300 million plus, or it's closer to 400 million now. Those 5 states represent less than like 20% of the entire US population. Right.
Wow.
And so you're essentially saying all of these people who live in this country, who do not live in these places, are not worthy for investment. So that's a wrong thinking. So then I was like, let me take a step further. Let me go even further into this data. And so again, this is a majority, like a large majority of the US population. The second part of it is BTW, these people actually generate over 60% of the GDP, right? And by the way, when I say 60%, I'm actually only talking about my region. So I don't even include the rest of the Northeast. I don't even include the rest of the far west. So, if you actually start adding more of those states, and I'm sure you can creep up to 70, 75%.
I think Idaho's growing too, right? A lot of tech is moving to Idaho.
Yeah. And by the way, Idaho is in my investment zone, because I was like, let me make sure I get Idaho up in here. Like Idaho and Utah.
Yeah, they're growing.
They're doing some really great stuff. But, it really goes to show how short-sighted this is. Because imagine if these particular states, these particular regions, were able to do all of this with less development than these other 5 states. So imagine if we actually start imbuing these states with the types of investment that they deserve, right? Because it is true, right? The simple fact is, if there is money in a place and you can help, create opportunities for people to create companies that are sustainable companies in those places at a faster rate, in a more sustainable rate, like you're going to create a tremendous amount of economic change, right? And so, that was really what really sealed the deal for me. It's like every single piece of data that I'm finding shows this. And one other really interesting statistic. So more than 44% of all companies that were founded in 2022 were in these regions too.
Oh, wow.
And so when you think about that as well, that's with a depressed, underdeveloped ecosystem.
Mm-hmm.
Imagine if, like, so for instance, I was talking to, so one of the things I do is I do so much research and just trying to find even just change makers. So I did this initiative starting at the beginning of this year. And actually, I'm about 8 people away from hitting my 1,000. But I said, I want to meet 1,000 change makers in 2023. So I only have 8 left. But
Wow.
the whole point is that I often talk to people right before they're going to found their companies. And because of the fact that they don't have the same resources and services in many of these states, I'm getting questions from founders being like, yeah, I'm just trying to figure out, like, where should I actually incorporate? How do I know which banks to work with? And I'm like, these are basic things that we take for granted in California, or we
We
take for
do.
granted in New
Yeah.
York, because there's
Mm-hmm.
so many incubators or services that you could just drop in one day and they're just like, oh, we're just here to help people. Right. And so if we could duplicate some of these different things in this ecosystem, which, by the way, we're already starting to do it, imagine what we can actually accomplish.
That's incredible. Well, and imagine the long-term effect it would have on not only the business owner, but their family and their family's family. You're creating a generation of wealth, but also that influences education, policy change, politics, like money influences everything. So we get more industry creating in those areas ever before. People are going to be looking.
Well, and I think, to your point, so this is my secret. This is my secret. I'm saying on a podcast, so maybe it's not going to be so secretive. So, I am a transgender, non-binary Black human, right? I was assigned female at birth, so literally, I guess I'm a lesbian as well, right? And so when you think about that, like coming from where I'm from in Mississippi, being where I've lived, in North Carolina and Iowa and Illinois, the one thing that you get from there is that the difference between someone feeling comfortable and safe and not is usually 500 or $1,000 a month, right?
Wow.
And so think about that. When someone feels safe, all of a sudden you go, instead of worrying about, well, the reason I'm not able to pay my bills and feed my child and have the things that I want might be because of this person who looks different than me, or who loves different than me, or who lives in a different area than me. But if you start to feel comfortable, you start to feel, and I should say, I'm speaking from experience, right?
Mm-hmm.
So my mother is a single mother of 3 kids. When she passed away, I had looked at her tax returns. She never made more than $24,000 a year the entire time she was alive, right? So she lived until she was 48. So she, for all of those years, she raised us 3 kids on essentially nothing. Like, I mean,
Yeah.
and even for me, I'm not even being egotistical. I mean, I literally have friends who I'm sure spent $24,000 on clothes last month, right? Like, that's what they do. And again, there's no judgment on them, because statistically they can afford it based on how much income they have. But, when you look at that, and I look at myself, I was on the free lunch program, right? I was, we did not have steady housing. Like, we often stayed with different people. My teachers knew there was no point in sending a letter home to my mother. You had to send it to me. And they also knew I was going to give it to my mom because I was scared of my mama. But, so like they knew that we had an unstable housing situation, right? And I know that as soon as I actually got into my career and I could get healthcare like I was supposed to have it, I could afford to, like, buy food. I was able to also help my family, right? All of my cousins, they know that when you graduate from high school, call cousin B because you're gonna get a laptop, right?
Mm-hmm.
You're gonna get what you need to make sure that you're gonna take care of this. And so I'm speaking from experience, because I know that difference between I am terrified and I'm not sure what I'm gonna have next, to I feel comfortable, I know where I'm gonna live, I know what I'm gonna eat, I know my kids are okay. That's the difference between someone who has a hateful spirit and a fearful spirit, and someone who's completely free to start thinking about, how can I be a positive influence, not only just on my family, but now I'm starting to think about my community and how I can do those different things. And so I do think that that's part of this, that's part of the mission here, right? Obviously we create this amazing ecosystem of amazing founders and companies, and we create the opportunity for them to hire great people. And then we get that extra $1,000 a month or extra $2,000 a month, so people can start getting out of this fear mechanism and they can start getting into hope, because hope is the differentiator between a great society and a society that, is going to fail.
And, hope brings about innovation. When people are feeling satiated with, I have a roof over my head, I have food on the table, we're in a safe place. Oh, I can create a solution for this problem that I'm dealing with now because I'm not worried about where's our next meal coming from. So hope definitely brings about innovation, which I think we definitely need all over the world. I think that's incredible. So tell me, first, how does a founder or business or brand, how do they qualify for funding? What makes them feel like, okay, I'm ready? Or do they always kind of live, hand to mouth, or kind of, oh, I made $6,000 this month. Oh, I made $10,000 this month. Like, when are they kind of ready to qualify for funding?
Yeah. So first and foremost, one thing that you need to keep in mind is that you don't need to take funding, right? So that's actually really funny for a venture person to get on, but that's actually a really big deal, because a lot of people assume that you need to have $1 billion business, but the simple fact is that we have millions and millions of amazing businesses that exist in this country, exist around the world every single day, that more than sustain the person who's founded it, that more than sustain the people who work for it, and they're great, right? So I want to clarify that, right? Because like, to a certain extent, like, one of my favorite companies is Mars. So Mars is a privately held company. A billionaire family owns it. They will never go public. They have no desire to ever go public, and they talk about it daily. They're like, true, we've been very fortunate that we've been able to have the trajectory that we became $1 billion company. But even if we weren't $1 billion company, we just want to be a family-owned business that we don't have to worry about other people's opinions. So that's the first thing you need to talk about amongst yourselves. So it's not just, you as the, entrepreneur, it's also your family, it's also your employees. Because when you do bring on investors, you are now beholden to those people. Right. And so there's going to be very specific expectations. And true, you might get cool investors like me, who's just like a much more laid back investor than some other people. Like, for instance, I often look for people who are trying to have less funding rounds. Like, I don't necessarily want to invest in people who want to be, fundraising for the rest of their lives. I think they should be building their companies. So that's the first thing. But having said that, so much of VC investing is belief in the actual person, like the founder. Right. So I say that because there's no such thing as this is the perfect time to seek investment, because there's people who, haven't even built their MVP yet, who might get investment because there's such a clear conviction. Like, it's so clear to that investor, like, okay, no, this person's going to be able to do it. And then it's at this price. I'm actually comfortable with this price. Like, like, let's just do that check size. But then there's other people who are just like, no, I need to see some traction, right? And so traction can look like a couple of different things. So one is like, you've had a certain amount of growth month over month over month, right? So, to your point, like, maybe it's like the 6,000 and 10,000 and 15,000, and I don't know. Each month you have that track record. And notice I said thousands, because a lot of the first companies you're investing in at seed stage, especially currently, like, they're not going to have millions of dollars of revenue. Like, if they do, then they're probably a little bit beyond seed stage, and then you'd be like, well, why haven't you raised? And then also, why are you raising now? Like, that just seems kind of weird. Like, why do you need me? Right? Like, that would be kind of strange. The second thing that people are really looking at is, so outside of like, have you had a little bit of traction from, a fiscal perspective, it's that, does the world want to use you? Like, I think a great example is like Superhuman, or like So both of these are like kind of like these like very like enterprise focused products that did not have, I mean, they still don't really have the best business models, but there's such a hunger for them that they've been able to continue to get investment, even as they continue to go through and continue to try to find their perfect product market fit. And so I think those are good examples that there's so much buzz and there's so much energy and there's so much excitement. I mean, I think one person who, I can't remember who said this. So I just want to clarify. I did not say this. Someone else said it I cannot think of. But basically they said that, product market fit is when customers start to use your product in violent and destructive ways. Right?
Interesting.
And so a great example is old school Twitter. So old school Twitter would break down constantly because there was so much traffic. They couldn't keep up with the traffic. They were trying to scale up at the same time. I mean, another great example is like Netflix. When Netflix first started doing streaming, like, one of the number one things they had to do was focus on how to actually stabilize the connection so that you can actually stream all over the world. So that's explosive and destructive ways. And so, like, for instance, if you've not made any money, but you can show me that you have a product that's being used in those types of ways, I can still write a check to you, because like, then if a person like me with my mindset, I go, So then let me help you actually figure out how we get to product market fit. Like how do we actually start to scale this up in such a way that we can actually make, XYZ amount of money off of it. And so those are two things. So explosive and destructive usage and or monetary traction are the two ways that, you have a good idea that you can actually go out there and get funding.
Oh, I love that. That was really specific. I like that. Now, what's, Divergent Ventures, what's like the top 3 things you guys look into for funding when you're looking at brands and founders and you're like, oh, I like that, or no, that's not for us. What kind of like sparks your interest?
Yeah. So first and foremost, like I said, regionality. So obviously you have to be in the right region. You'd be surprised at how many people apply, considering how explicit we are about
I'm not
our regional focus.
surprised.
I'm like, no.
How many people don't read?
And my favorite part is like somebody actually, I said, well, you don't meet the thesis. They were like, well, I was still hoping that you'd be interested. And I was like, hoping and dreaming is not how things come true, honey. Yeah, I was like, do I need to treat you like my toddler? Okay. But then the second part of it is like, so I really, really care about the founder. And I really care about capital efficient, pragmatic founders, right? So for instance, like the founder of Stripe, true, they just did a fundraise. But the thing is they had only used a very small percentage of all of their funding. And he did the fundraise primarily to unlock, money for his employees. And so, this was just like a pragmatic move to ensure that his most loyal employees would stay. And so I love that approach. I love people who are thinking about what can I do to ensure that I can continue on the trajectory that I need to continue on so I can have a successful exit. But at the same time, like I don't want to be making decisions because I'm coming from a place of scarcity. And so I love that. I love those types of founders. And then third is I really look for founders who are looking for acquisition as their exit. So I'm increasingly negative about IPOs. I mean, I use Mars as my example because that is actually my dream scenario, right? Mm-hmm. So my dream scenario is a company that is super, super, super great. Like they understand exactly what they're building, why they're building it, who they're building it for. They have a great, talent pipeline. So they have the right talent they absolutely need. And then they're just looking for someone like me to help make the right connections and help them accelerate the product market fit. And then they don't want to do 5 or 6 rounds. Instead, they're looking for ABCD company to acquire them. Right. I think that's like the perfect example of what success looks like. And also because of something, I'm gonna drop another term because I think this is super important. And so anyone who is ever looking to invest, especially anyone who's looking to get a venture, you have to know about dilution, right? So that very first time you make an investment, your number might look great because you're like, oh man, I own 10% of this company, I own 11% of this company. But by round 3 rounds later, you're like, I own less than 2% of this company. Like that's not great, right? And so like for me, it's so important to think about how the heck are we going to retain the value of our investment? And so, one of those great ways to do that is through acquisition. I mean, a great example is like I wrote a check for a company that was like, in my mind, like somewhat negligible, but because they're an acquisition target, it's already looking like the value is about 5x. And I only did this check like 6 months ago. So, it just creates this really great upside and it de-risks your investment to a certain extent.
Gotcha. I love that. I think what happens too is, we're in the Shark Tank era of, television and everything. And I think people, especially business owners, they look at this show and they think like, oh, this is all I need. And then I'll just go talk to the sharks. And then you see how many people are so disappointed and everything. And in fact, my last guest is going to be, do you know Vicky? You must know Vicky.
Oh, yeah.
Vicky and Charisse. Yeah. So they were on my podcast last week and we were talking about Shark Tank and that whole experience. And interesting. I'll be curious to watch it this week. That's for sure.
Which, by the way, did you know that? So was it the owner from the Mavericks? He has not made a single dollar off of a single deal that he's done during Shark Tank.
I did not know that. Really?
Yes. So I just think that's like very interesting. And again, the one thing about, so this is another interesting note because like they've obviously seen hundreds of companies over time and they've made hundreds of investments. And the simple fact is at a certain extent, you can only manage so many of these investments at a time and actually have them be successful. And so that's another thing that I think is super important when you're thinking about investment. How many people are they actually managing and how much can they actually pay attention to you? Because that's a huge part of it as well.
Yeah. And do you think, if the companies that invest in with Divergent, how much of a say do you get to have on their practices and regulation, product development? I mean, how much are you in on the ground floor with them? Or are you just like, here's a check, I'll see you in a few weeks?
What's so funny is I was telling my wife, this is just like being a product manager, right? So much about being a product manager, you don't necessarily have the ability to fire and hire people, but you have the ability to influence people. So instead of saying, I have control, my goal is to have such a great influence and be so well respected that they choose to follow my advice. Now, having said that, if my fund gets to, the certain size, because, right now, we're small potatoes compared to some of these funds, right? Like I was reading an article this morning that someone just did $1 billion raise, and I was just like, I cannot imagine asking for $1 billion. I mean, I'm going to have to at some point, I guess. But like, I was just like, well, I was like, yeah. But the whole point though, is just that, at those levels, like you're writing, 10, 20, you're writing a huge part of the check. And so then you can demand like board seats and stuff like that. And so that's when you do have a little bit more control. But even then, again, I fundamentally believe so much in life is about being a value added partner to someone and they choose to follow you. So I don't care how big I get, like my goal is to be influential, because if I'm influential, I will ensure that I get the types of results that I need anyway.
I love that. It reminds me of Arlen Hamilton's book, It's About Damn Time. That really influenced me to think about, I never thought about investing or no, that's not for me. That's not for the, founders on our network. And then once I read that book, I was like, oh, everyone needs to read this book, by the way. Now tell me, if I'm an individual and I was just like, my grandmother passed away. I got 30K. I don't know what to do with it, but I know I want to invest it. What would you recommend to me who's like, take the money and invest it?
Yeah. So first and foremost, I'm going to tell you about my journey, maybe, because that's the way. And I think that's really interesting. So first and foremost, I started off with the stock market, right? So I started off with the stock market, learning about the stock market, learning how you can kind of understand why things happen in the stock market, because that then creates like a basically like financial like layer for all the rest of the types of investments, right? Then after the stock market, I then got into a little bit of real estate, both personal and other stuff like that. And so then that was like really cool or whatever. But then I also realized that, again, both stock market and real estate, it kind of feels like kind of silly in some ways, because like so much of it's completely out of your control, right? It's just like someone arbitrarily made a decision from a governmental perspective, and then all of a sudden oil goes up or goes down. And
interest
it's just like,
rates.
Well, but oil, it's like, but technically the value hasn't changed. It's just that someone said something silly, right? And so I didn't really love that. And so then I got into this like the Republics type thing. So like we can do like the large, really huge, so these are like hundreds or thousands of people each give like a very nominal amount. And so what was really great about that is that I actually started being able to still see what deals look like and how they assess deals. And I was just like, that's what I do in product management, right? Or like even for yourself. If you are someone who's ever had to buy a car for your family, choose the bank for your family, you like when you're in the grocery store and you're trying to like make an assessment on what's to eat and what not to eat. In some ways, you've kind of done some kind of investing, right? Because you've had to go through and make a specific decision about what you think is best for you. And that's ultimately what I realized through some of this. I was like, it's just gut instinct. I got lots of guts. And so then, then I finally got into angel investing. And so I actually usually suggest to people, either try angel investing. So angel investing, usually you can do $10,000 or less for a check, right? And so that's a good way to go about it. So for instance, I joined Gangels. So Gangels is kind of the large LGBTQ plus angel network. And so I was able to start off at like, $1,000 or $2,000 or $5,000 so I could get comfortable. And once you actually start to get really comfortable, then I was like, oh, now I have more opinions. So then I actually went to a venture fund. And so then, I wrote like, a $50,000 check into like my first venture fund. And then I did a couple other ones. And then I started my venture fund. And so having all of that to say, start reading. Because even with the stock market, I started just reading the Wall Street Journal and the New York Times and Insider. And also the information, I really love the information. So I have to really promote the information. The information is an independent news source that's founded by a woman. And what I love about it is that they're just talking about the things that you can tell they're kind of talking about the things that they're interested in, which also happen to be, just worldwide trends. And so that's a really great place to go.
Where do you find it? I'm going to put this in the show notes. What's it called?
Yeah. It's called the information. That's the actual
Oh,
name. So
that's
there's
very
it's
clear.
really great. So there's a website, there's an app, and so that's actually kind of my most trusted source because like whenever I'm trying to figure out like what the heck is going to be going on in the world, I usually go there. But just start educating yourself on these like basic things because it really is as simple as you're trying to decide between buying this thing and buying that thing, right? And so it's just about what you feel comfortable in because the other reality about this is that most companies fail. It's
Yeah.
an actual fact, right? There's nothing that you can do about it. Just like, people used to always say real estate is so, like it's the best investment. We know ever since 2008, it can fluctuate greatly, right? So
Yeah.
there's no such thing as a surefire investment. And that's why a lot of times, a lot of my investments historically and even still today are what am I impacting by making this investment, right? Because I can't guarantee I'm going to make money off this investment. But if I'm investing in a female founder, if I'm investing in a new industry that I think is really cool, at the very least, I know I'm pushing something forward, right? And so
Yeah.
that's one of the other things you have to decide, right? So you have to decide how comfortable you are with losing money, and then you have to kind of create some of the parameters around, like, if I'm going to lose money, what would make me more comfortable? And so that's how I did it. Like, I was like, I'm comfortable. Like right now, a lot of my money is also in this venture fund. So, if it fails, I can at least say I have created a new ecosystem of talent in my regions. And so that I'm comfortable with that. And,
Yeah.
the people who are investing with me essentially have to be comfortable with that too. And so it's a very mission oriented thing because, again, you can't guarantee anything in life other than the impact that you can personally have on other individuals.
I so agree with that. I love that. And would you say, it's hard to say, but risk factor for someone who's new to investing and getting into, venture capital or just, funding in general. And they're like, okay, here's my grandma's 30K. What would you say? It's a long game, a short game? What would you
Oh,
say?
it's a long game. So,
Yeah.
so actually, maybe I'll give a few more parameters around venture firms. So most venture funds are 10-year term, right? So what that means is on day one, when you invest your money with a venture firm, they're essentially telling you, we think that this investment period is going to be 10 years. Sometimes you get lucky, right? Because like how it works out is that, as companies exit, as positive or negative things happen, those things kind of get, completed, and anything that has happened from them gets put back into the fund, right? So like let's say, you make a really great investment and somehow that company ends up being stellar and you actually have an exit in 3 years. Then what will happen is the venture, fund manager will say, hey, I've done all my, my accounting here. This is how much should go back to you. And that's the other interesting thing about venture firms. And I actually think this is the kind of the nuance, which actually makes venture firms kind of cool. This is also why a lot of new fund managers, I don't think understand this part though, is that how it works is that a fund manager in the US, for the most part, we follow the European model, which means that we have to return back to all of our investors the money they put in before we get a dime of the carry
Or you
that we
get
have.
paid.
So
Yeah.
exactly. And so, it behooves me obviously to
Yeah.
try to accelerate this process because I don't get any money until we have something beyond the amount of money that we've raised. And so, as soon as an exit happens, of course, I'll be like, oh, sure, here's back your money. I'm
Yeah.
this much closer to actually making money myself, right? And so so when you think about what you have to look out for, in addition to everything else, you have to look out for people who are fundamentally comfortable and able to also be without a paycheck essentially for 10 years.
Yeah.
Because a
Right.
venture firm is essentially a full-time job. So they need to figure out how they're going to survive if in between exits, or even if there's not a single exit, because again, there's no guarantee that the
It could
firm
fail.
manager,
Yeah.
and even if they break even, for instance, that means the firm manager will not get a single dollar,
Mm.
right? Because they were supposed to raise 10 million. They only had exits worth 10 million, so $0. So they get nothing of the investment above that. And so that's another thing. That's another example of what to watch out for, because you can't have someone who's like, I'm trying to do this or like whatever to try to make this deal work. You have to have people who can be patient and can have the type of diligence that needs to happen to ensure the investment is protected. And then on average, we tell people the goal really is to have exits between years 7 and 10. And that's also
Mhm.
why a lot of firms, once you get to year 7 and 10, they'll lower their management fees, right? Because the idea being that there's not really that much management there. And then hopefully there will be exits soon. And so you don't really have to worry about it. But again, the reality is sometimes it could be a year, it could be, and also it could also be 15 years. Because another thing that people don't know, and another reason that's not great to have lots of funding rounds, is essentially every time there's a new funding round, that clock resets, right?
Ah,
So, I invest in the seed round, and then my clock says in 10 years I should have an exit. Okay, in a year when they do Series A, technically it resets. Like, so it should be 10 years from there. So if you actually look at any LPA agreement, it kind of says that, like the goal is for 10 years, but we know that that can be fudged, right, a little bit, because like we know that if they have to do lots of investment rounds, it's less likely that that exit will happen for 10 years.
oh, wow. Wow. That's really fascinating. I love this. I mean, I just saw the Bernie Madoff documentary on
Oh
Netflix.
my gosh, it was so good.
It
But
was
also,
so
can I?
good.
So it's actually so funny. So I went to my attorneys and like my fund managers, and I was like, my fund administrator, my bad. And I was like, okay, I just want to make sure people know that like I'm not Bernie Madoff. I was like, I want everything. I want them to be able to log in and see anything whenever they
Don't
want
print on
to.
that
I was
paper.
like, I could not believe. Can I just tell you? I could not believe this because I get like I like so being a in venture, I had to open the big fancy accounts with like the First Republic banks and the Silicon Valley banks, and that's like a little bit antiquated in my opinion compared to what
Mhm.
I'm used to, and I made me a little squirmy. So I was like, I cannot imagine putting millions and millions and millions of dollars with Bernie Madoff, and he was like, come here and look at this sheet of paper, and you can't even leave this office with a sheet of paper. I'm sorry.
I
Needed
couldn't believe it
somebody with
either.
some common sense. I was like, they needed, okay, I gotta say, like I was saying, they needed some black mamas to come up in there and talk to Bernie about himself. I was like, because ain't no black woman gonna
That's why
let
he
that
did
man
not
up there.
target Black women. No,
Thank you. He
he,
knew. He
he
knew because
knew.
the thing is like, honey, where my money at? You need to run me my money.
Yeah,
Okay.
no,
Or else I'm gonna come up in there, you're gonna know, you're gonna find out some stuff. I could not believe that when I saw that. I was like, that's
I was
insane.
shocked. Yeah, I was shocked too. So much money. I'm like, nobody got a statement? What do you mean you never got a statement? Like,
Well, and also to that extent, like I've never actually heard like so for the most part, you don't really hear huge cases of venture people being untrustworthy because it's also the whole business is based on trust. So like you're not going to get deals if you're not
if you have a
trustworthy.
bad
Also,
reputation.
exactly. So like I've never heard of people being untrustworthy, but like you should really be thinking about that. Like I cannot like if someone hasn't thought through basic things about compliance or how they're going to make sure that that their money is going to be there, that's a red flag. Like there's so many systems out there, and again this also goes back to how they prepared, right? I had to set aside money and I had to say how am I going to pay for all this stuff, right,
Hmm.
until I fundraise. But the simple fact is that they should be thinking about that because that's just the cost of doing good business, and
Yeah,
that's what we should all be doing.
love that. It's so true. It reminds me of the whole thing with WeWork too, and how that completely went belly up and making so much money, and meanwhile there was no money. It's crazy. Well, B, this has been really really informative. So I'm sure people are taking arduous notes to get to a better understanding. But tell me how people can get involved with Divergent Ventures, either the founder or an investor. Like, how can we get involved
Yeah.
with what you got going on? Because it's great.
Yeah, so I'm a product person. So the first thing I did was spin up a website. So it's www. So this is actually someone said it the best. They were like, "It's Divergent without the vowels." So that's my wife. My wife's the marketer, so she came up with it. So it's DVRGNT ventures.com. And so if you go on that page, one, it kind of tells you some of the statistics I shared here. But if you go down to the bottom, there's a founder submission form. So submit your form there. And my chief of staff, we go through all of those submissions and we do respond back to them. And then if you are an investor or you want to learn about investing, because to be truthful, I will have a conversation with anyone on this investor tip because I think that it's one of the scariest things you can do. Right. Because well, one, it's like, oh, I'm a big kid now. I'm going to do some
Yeah.
serious investing. But then
Hmm.
secondly, it is kind of terrifying to think about like, what this looks like. And so I'm always willing to have a conversation and then help point, folks to resources, or if you want to invest in my firm, of course, obviously,
Amazing. Well, then we're going to
I
put your
take
email in the show notes too, then.
exactly. Yes, we can do all that good stuff and we can do all the education.
I love that. Now, have you ever thought about writing a book?
So it's actually so funny. So I've been talking about writing a book for a while, right? Because so I've been a speaker for a long time. And so
Yeah.
my initial book idea was this idea of empowered people and like what that does from a resource perspective. And once I started the venture firm, I realized that it's an empowered ecosystem. So I'm currently taking notes as I build this up because I think that's going to be something very, very important once this is over. And when I say important, I think it's because I want to demystify this idea. Like when I was growing up in Mississippi, I honestly thought Southerners were dumb. Like I
Yeah.
really did. I grew up there. I lived there. I loved everyone around me. But I was like, we didn't have the same jobs. We didn't have the same fancy stuff. And when I finally went to other places, I was like, oh my gosh, like maybe Southerners, something's wrong with us. But
Mhm.
it took being educated, being curious, and doing the research to understand that we're underdeveloped
Underrepresented.
in
Yeah.
terms of
Mhm.
in this country. And so and so that's why this work is to also, again, this is so important because I really really think that at the end of it, the insights that I glean from this process will be foundational as we start to think about in this country and how we actually create an equitable country. Because it's not just like, so most people are just like, they think about race, they think about gender, they think about sexuality, but the geographical differences, right? This is one of the things, like I used to complain just like everybody else about like why does every state have two senators? Why do we have population-based representatives? Like, why do they get the same amount of representation? And now I know because I've met so many of them across this country, and the ways that they think about work, the ways they think about society, the ways that they think about how they want to have impact is exactly the same way that I think about it, right? It's
Yeah.
probably exactly the same way that you think about it.
Mhm.
And so that's what our forefathers were actually trying to tell us, is that everyone should have an equal voice, even when they're in places that we don't think about them. And so I'm really hopeful that as I learn more and as I continue to document this, I'll be able to write something about this because I do think it's the greatest work of my life.
I think you just wrote your introduction, by the way, of the book. That was brilliant what you just said and so succinct. I love that. So we're going to put in the show notes and all the places, link to your website, link to you, all the things, and the information. I'm going to add that too. But before we wrap, we've got to get carried away. I know you get carried away about investing and you could talk about this forever, but I got to know something else you're absolutely obsessed with. What do you get carried away about?
Oh my gosh. So it's actually shoes. So I mean,
Are you a sneakerhead?
I'm such a sneakerhead. It's like insane. Actually, it's so funny. So I hired a social media team to help me with my business. And so like, we were doing all this professional content. They were like, honestly, we just have to do your sneakers. So I've actually started posting it. And I actually have 2 boxes here that I'm supposed to unbox for the social
For the
media
video?
post later. Yes, because and I'm just like, and it's gotten so bad though, because
How many do you have?
so I have like 300 probably. Yeah. So like my office is actually my shoe room too. So like my shoes are over there and then I'm over here in the corner because my shoes are more important than my desk. Let's just be truthful.
I will not
So,
give my husband any more shit for the 40 pairs of shoes that he has. Are they in plastic bins? How do you store them?
oh, of course they're in plastic bins. They're so such. Actually, I'll take it off.
Let
So
me see.
you can see.
Oh
So
yeah, he
behind
has
me,
the same thing, the same setup.
the Container Store take all my money. Actually, so there's 2 things I want. So I'm very passionate about my sneakers. So I've been actually starting to do research. I'm trying to figure out how to insure them properly. So if something happened to them, I could replace them because it's getting, so there's apps that will show you how much your sneakers are worth. And I was like, this is
I
actually a
know.
sizable
I've
amount of
seen it.
money. Right. And so like, and I'm just like, why won't anyone let me insure my shoes? Right. Like, and I'm
That's
sure
a
that
really
like,
good question.
for
That's like
some women, for
jewelry.
instance, their purse collect
Yeah.
exactly jewelry's like, but like a Birkin bag. There's not really an
Oh,
insurance
yeah.
for Birkin bags either. There needs to be insurance for these collections, these collectibles, right?
Yeah.
Because they're just as valuable and it's very difficult to replace them.
And they accumulate value.
Exactly.
My husband just bought the Nike Tiffany and Co. collaboration shoe.
That's one of the ones. That's one of the ones that I have to open right now. Actually, yeah. So I finally got it. It took me a while to find it
You
for
got
the
it
right price.
yesterday.
But I finally got it. Man, I'm so excited. Like, I actually, you know what? So there's an event, like there's a mixer thing on Sunday. I was like, maybe I'll wear them. I got to wear my Tiffany shirt. Now, the one
Yes.
thing I don't have a nice Tiffany chain yet, but yeah, I'm gonna do it. It's like,
Okay.
because everybody looks good in Tiffany. Like that.
Heck yeah.
That's the hashtag, right? So
Yeah.
that's what we're gonna do.
Yeah, they're real pretty. When he showed them to me yesterday, I won't spoil it for you, but they're real pretty. He also has a pair of LPs that I think are by far his favorite, and he rarely wears them. We wore it to a wedding the other day, and he was like, and there was grass, and he's like, I need to change my shoes.
I know. So I was telling a friend of mine recently that I need to be like DJ Khaled and get like the little pillow. So for one, he walks in with one pair of shoes, then he changes to his nice pair of shoes, and then he has like a little pillow under them so that they don't touch the ground. I was like, I think I might have to do that for a couple of these pairs of shoes, because I get so stressed thinking about wearing them that I haven't worn them, but I feel like I have to wear them just so I could say
that is so funny.
I did. So.
I can't believe you said that. I can't wait to tell my husband this.
Tell him to look up DJ Khaled. Like, I was like, DJ Khaled is right, though. Like, that's the way you protect your shoes.
That is so funny. I love it. All right. Well, then what's the opposite of that? I want to know something you can't stand that people get totally obsessed about, carried away about. I'll give you an example. I can't wrap my head around anyone who can drink matcha because it tastes like you're eating a lawn clippings. And I don't like camping. Not a fan of camping.
Oh my gosh. I wish you had said camping, because like camping is definitely one of mine. My wife's obsessed with it too. And it's just like, this is the exact, like, this is one of the few things that we're so 110% opposite on. It's like kind of crazy. You know, I think maybe like the Android versus iPhone thing. Like, I'm an iPhone user, but I don't understand like why is this continued like trash
rivalry
talk?
Yeah,
like, just if you like your phone, just like your phone. Like, you don't need to come up and say I'm an iPhone person. Just like I don't need to go up to you and say you're an Android person. True, do I not like the green? Sure, but at the same time, that's their fault that these are different colors. This is not us. It's not about us. It's about them. So let them have the fight, and then the rest of us can just be sane people again, because I'm so over it. Like, I've been in 3 different conversations this week where people have been complaining about this, and I'm just like, I'm over it. Like, I don't understand why we're doing this.
Yeah. And please, it's a phone. Calm down. I also think it's always interesting when iPhone and Android come out with a new phone, people are in line to buy the phone while being on their currently working phone. Like, they have a product that works, but they're going to go buy a new one.
So the one thing I will say is I'm a super early adopter. Like, so there's no question whatsoever. Like, I always adopt things to start like very early. But the simple fact is that just admit that. Like, don't say there's anything wrong with your phone. Yeah. Like, you just want the new thing.
Early adopter.
That's how I am.
Yeah,
exactly. I was like, I just want the new thing because it's great. And even if it's broken, I will still think it's great because I got to see that it was broken. So.
All right. Well, you and my husband have a lot in common because he's also an early adopter. I'm going to start calling him that too.
Yes.
Yes.
And it's a great way to be. We are the guinea pigs that make everything else work.
Yeah. 100%. So I thank you for taking one for the team and giving feedback to make products and services better. Thank you so much for joining me. I've had a great time getting carried away with you. Learned a lot. Again, everyone, take a minute, click on the show notes and follow B and all of their adventures, especially now that we know that you're a sneakerhead. I got to go check out your Instagram and see what your team has come up with. This is exciting. Thank you so much, B. We'll be in touch.
All right. Well,
bye.